De-dollarization has begun in China, is heading this move to totally kill the dollar. Soon Yuan will now be the most accepted currency in the world. The recent deal signed by Saudi Arabia and China to swap $7 billion with 50 billion yuan, or 26 billion rial, has been seen by financial analysts as the start of the dollar fall. The US is helpless now. Saudi Arabia will now exchange their crude oil for yuan. Russia has also started telling countries to pay with yuan. The dollar is in trouble. The signing of the currency swap agreement between the People's Bank of China and the Saudi Central Bank marks a significant shift in global financial dynamics, with implications that ripple far beyond the immediate terms of the deal. The agreement, valued at 50 billion UA, approximately $6.98 billion or 26 billion Saudi riyals, is not just a financial arrangement, but a symbol of changing tides in international currency usage and geopolitical alignments. Hello and welcome back to Innovative Check YouTube channel, where we delve into the innovative and transformative projects changing our world. If you're new to the channel and enjoy learning about innovation stories around the world, you've come to the right place. Please subscribe, like, and comment to help boost our videos on YouTube. This 3-year agreement, extendable upon mutual consent, is poised to strengthen financial cooperation between China and Saudi Arabia. It aims to expand the use of the two countries' currencies in bilateral trade and investment, thereby facilitating economic interactions between these major economies. This move is particularly notable given Saudi Arabia's status as the world's top oil exporter. Traditionally dealing in US dollars, the shift towards using the yuan and the rial in these transactions could have far-reaching effects on the dominance of the US dollar in global oil trade. Just a quick reminder to hit the like button below. YouTube has been restricting my videos a lot recently because of bots, so your like does help out this video massively in terms of the algorithm in YouTube. China, as the world's second largest economy and a leading importer of crude oil, has increasingly sought to price oil derivatives in its currency since 2018. This strategic move is part of China's broader ambition to internationalize the yuan and reduce global reliance on the US dollar. The currency swap deal with Saudi Arabia is a significant step in this direction, especially given the volume of trade between the two nations. In 2022, China imported $65 billion worth of Saudi crude oil, which constituted about 83% of Saudi Arabia's total exports to China. The significance of this agreement extends beyond China and Saudi Arabia. It is part of a larger trend of dedollarization, where countries around the world are looking to diversify their currency reserves and trade settlements away from the US dollar. This trend has been partly fueled by geopolitical shifts and economic strategies aimed at mitigating the risks associated with heavy reliance on a single currency for international trade. If you are enjoying this video so far, please don't forget to subscribe, share the video, and comment. China's push for the yuan's internationalization has seen the establishment of numerous other currency swap agreements. The People's Bank of China currently has 29 active swap agreements, amounting to over 4 trillion yuan. These agreements span various regions, including several in the Middle East, such as with the United Arab Emirates, Qatar, Egypt. The deal with Saudi Arabia is the 30th such agreement, underscoring China's growing economic influence and the increasing acceptance of the yuan in global finance. The currency swap is also significant for Saudi Arabia's economic strategies, particularly in light of its Saudi Vision 2030. This ambitious program aims to diversify the Saudi economy beyond oil and foster development in other sectors. Access to yuan liquidity through this swap deal could facilitate increased Chinese investment in Saudi Arabia, contributing to the kingdom's diversification efforts. The presence of Chinese banks in Saudi Arabia, such as the Bank of China, which opened a branch in Riyadh in 2023, is a testament to the deepening financial ties between the two countries. Moreover, this agreement reflects a growing collaboration between the two central banks. It encourages bilateral dialogues and the exchange of policy insights, fostering a deeper understanding and cooperation on financial matters. Such interactions are crucial for shaping the future contours of global finance, especially as countries seek to navigate a rapidly changing economic landscape. In summary, the currency swap agreement between China and Saudi Arabia is a pivotal development in international finance. It not only symbolizes the growing importance of the yuan, but also indicates a shift in the global financial order, as countries increasingly look to diversify their economic partnerships and reduce reliance on traditional financial powerhouses. Agreements like this could pave the way for a more multipolar economic world. The implications of the China-Saudi Arabia currency swap deal extend into several domains, including geopolitical, economic, and financial sectors. These implications are vast and multifaceted, reflecting the complexities of the current global landscape. The currency swap agreement between China and Saudi Arabia signals a shift in geopolitical alignments. Traditionally, Saudi Arabia has been closely allied with the United States, a relationship that has been a cornerstone of the Middle East political dynamics for decades. This new financial partnership with China may suggest a reorientation, diversification of Saudi Arabia's international alliances. It reflects Riyadh's recognition of China's growing global influence and perhaps a strategic move to balance its international relationships. For China, the deal is a testament to its expanding global influence. By forging closer ties with Saudi Arabia, China not only secures a strategic economic partnership, but also strengthens its geopolitical presence in the Middle East. This move is part of China's broader Belt and Road Initiative, BRI, which aims to expand Chinese influence through economic partnerships and infrastructure investments across Asia, Africa, and Europe. Economically, the deal underscores the ongoing shift in global trade patterns. The use of local currencies in bilateral trade reduces the dependence on the US dollar, potentially lowering transaction costs and minimizing exposure to dollar-related volatility and geopolitical risks. For Saudi Arabia, using the yuan in its trade with China, its largest crude oil customer, could provide more stability and predictability in its trade revenues. This deal also indicates the growing prominence of the yuan in international trade. As more countries enter into similar agreements with China, the yuan's role as a global trade currency is likely to increase, potentially altering the dynamics of international trade and finance. This shift could challenge the hegemony of the US dollar in global markets, leading to a more multipolar currency system. In the financial sector, the deal is likely to increase the demand for yuan-denominated assets. As more countries accumulate yuan reserves for trade purposes, this trend could lead to a deeper and more liquid yuan market, potentially attracting more global investors to Chinese financial markets. For Saudi Arabia, the agreement facilitates access to yuan liquidity, which can be crucial in times of financial stress or when facing constraints in dollar-denominated markets. This access provides a financial safety net, diversifying Saudi Arabia's financial resources. If you are enjoying this video so far, please don't forget to subscribe, share the video, and comment. The agreement is expected to facilitate trade and investment between China and Saudi Arabia by simplifying transactions and reducing currency conversion costs. Businesses in both countries may find it easier and more profitable to engage in bilateral trade and investments. This could lead to an increase in cross-border economic activities, including joint ventures, direct investments, and other forms of economic collaboration. The gradual move away from the US dollar in international trade, often termed Dedollarization, poses significant implications for global financial markets. The US dollar has long been the dominant global reserve currency, and its widespread use in international trade and finance has afforded the United States considerable economic and geopolitical advantages, including the ability to finance deficits at relatively low costs. However, as countries like China and Saudi Arabia begin to conduct more of their trade in currencies other than the dollar, there could be a gradual erosion of these advantages. This shift may lead to a more balanced and multipolar global financial system, but it also introduces new complexities and uncertainties. For instance, a reduced demand for the dollar could impact its value and the U.S. economy's stability. The China-Saudi Arabia currency swap agreement is more than just a financial arrangement. It is a marker of shifting global power dynamics and evolving economic relationships. Its implications are profound, touching upon geopolitical alignments, economic strategies, and the very architecture of the global financial system. As the world moves towards a more multipolar economic landscape, such developments are likely to become more frequent, reshaping the way nations interact and transact on the global stage. Thank you for your attention, and I welcome your thoughts and questions on this complex and vital subject. Do you want to watch more videos like this one? If yes, please like and share the video, and subscribe to get exclusive videos about how phenomenally China is developing and growing its influence. Your subscriptions and likes motivate us to generate more content, so please keep supporting us. Check out this video showing on your screen right now, and I will see you on the other side.